So Richard, what happened to the bank since last week?
Well, I'll give you the real short version first. Silicon Valley Bank and Signature Bank, two substantial banks, went completely under since last Friday, while a third smaller bank had voluntarily ceased operations earlier last week. Simultaneously, the largest weak European bank, Credit Suisse, needed a $52 billion bailout this morning in order to avoid a massive run on their $575 billion in assets.
So speaking of bailouts, how did we, being the United States, respond to our bank failure situation?
Thus far, I would say we've responded quite well. The first thing our regulators did was they designated the two banks in question, Silicon Valley Bank and Signature Bank, as systemically, what's the right term? Systemically important banks,
Right.
such that they couldn't be allowed to fail. Well, they could fail, but they decide that allowed them that designation to cover all the deposits over $250,000. This was really important in order to stop other banks from having bank runs, and because most of the money in these banks were big business accounts. If they didn't have the money, they couldn't keep their businesses run. So I would say that was a win. The big win was the money didn't come from the taxpayer. In this case, the bondholders got wiped out, the stockholders got wiped out, the depositors are going to get their money back through levies on the entire banking system. Simultaneously, the Federal Reserve Board started a fund to lend billions of dollars to a new troubled bank, for example. They'll lend money on their long-term bonds if they need to give it back to depositors right away. These things may fix, stop a wave of bank runs. I don't believe that's likely to happen now.
Yeah, and I think that's the question on everybody's mind is, does that mean, what they've done, is it over?
Well, I tend to agree with Larry Fink in this case. The other day came out, he was the founder of BlackRock, a titan, they always say in the investment world. And he said he thinks Silicon Valley Bank is the canary in the coal mine. But I think this may play out in unexpected ways due to so many of the losses coming in the shadow banking industry, like these recent blowups. In addition, the regional banks still haven't seen the losses. They have big investments in commercial real estate, specifically office buildings. So the regional banks, they're going to have problems.
Yeah. So, the markets, which have been certainly volatile in a lot of ways, how have they responded? What do you see happening there, and kind of what are you looking for?
It's been a wild ride since last week, for sure. Stocks are down about 3%, but the big action has been in yields. Last Thursday, the 2-year Treasury bond was yielding 5.04%. Yesterday, it had dropped from 5.04 to 3.01. That is the largest drop since the Lehman Brothers collapse in 2008. It makes me remember again the economists I read a couple of years ago who said they could prove mathematically the US economy could not withstand interest rates at 4% or higher. It's starting to look like they may have been correct.
Yeah, it looks like we're putting that one to the test.
It's kind of looking like it.
So, Richard, switching to the investments that in the portfolios you manage for clients, managed futures are the largest allocation in the portfolio at this time. How have they fared, and what do you see happening there?
Well, initially, Friday and Monday were brutal for managed futures. You see, everything in the economy and markets, everything was going towards higher rates. And then in one day, it reversed massively. That's a near guarantee for short-term losses for managed futures. Longer term, it's the exact opposite. Failing banks and a sharp increase in risk are exactly the trends that managed futures need in order to profit. The increase we've seen in risk this last week is exactly the waters that managed futures like to swim in.
Mhm. Yeah, and so, everything we're talking about and everything everybody's seeing in their, the news at this moment is about risk. And how broad is it? Is it systemic? What do you see? What do you think you need to do right now at Secure Retirement to mitigate it?
Well, in our technical allocation portfolio, we mathematically analyze and control the risks. So our standard deviation or measure of volatility is about 5.75 right now.
Mhm.
And that would be clearly sort of dead center conservative. But as most of our clients know, we have additional risk control measures. I will reduce the standard deviation to 1, which would be cash, money market, if I had to do so in order to protect the principal.
Mhm.
So we're going to do that all the time. But at the same time, right now, we're looking at potentially easing up on the risk control to take advantage of the opportunities that are just now starting to develop. If they get bigger, if risk continues to grow like we've seen the last few days, then risk won't be our concern.
Mhm.
We'll be looking at profits.
Well, that reminds me of what you've said for a long time is if you would have known everything you know now about what happened in 2008, you would have you'd have been invested very heavily, almost exclusively in defensive assets to take advantage of all that. So
what we own right now
Yeah.
would have made a lot of money from 2008 through 2009.
So that's exciting.
So Jeff, can you speak about our income-oriented portfolios and any risks or opportunities you see on that front?
Yeah, there's a group of investors and clients that their portfolios is designed more for income, dividends, distributions that they either take as cash flow or they reinvest. And of course, this week there's been tremendous volatility in a lot of the assets that we utilize to create these dividends. I think what I would say is that we use a high quality investments, whether it's on the equity side or the fixed income side. And as importantly, we use great managers. We have most of our fixed income with PIMCO, the largest fixed income manager in the world. And they do a great job of risk management and keeping in touch with us. So everything is paying its dividends and distributions in full on time. So we don't have any concerns about that. However, we don't take anything for granted. We watch continually to make sure that what we're utilizing to create that income is sound and is not in harm's way somehow. So yeah, always happy to take calls about that if anybody has any questions, for sure.
All right. Well, that's, I think, all we wanted to cover today on banking. We're also sending out, I think tomorrow, a written report covers this in some more detail.
Yeah.
And of course, if you have specific questions or concerns, feel free to give us a call. Thank you all for watching.
Thank you, Richard.